Imagine holding a single piece of paper in your hand, a simple banknote, that has the potential to unlock a future you've only ever dreamed of. This isn't a fantasy or a get-rich-quick scheme, this is the tangible, pulse-quickening reality for anyone paying attention to the seismic shifts currently exploding from the heart of the Middle East. For decades, the Iraqi dinar has been the ghost story of the currency world, a tale whispered in online forums, debated by economists, and clung to by hopeful investors, all centered on one elusive, almost mythical event, the revaluation. It was a narrative shrouded in shadow, dominated by self-proclaimed gurus with vague predictions and a frustrating lack of hard, official evidence. But as of right now, that entire era is over. The silence has been shattered in the most profound way imaginable. The Central Bank of Iraq has not just dropped a hint or made a cryptic statement, they have launched a financial thunderclap, going fully public with a detailed, phased, and audacious roadmap for the dinar's revaluation, a document so revealing it effectively lays bare the entire strategic playbook for resurrecting a national currency and, by extension, an entire nation. This is the moment the entire market has been waiting for, the dividing line between speculation and fact, and it changes everything. This official announcement, which we have meticulously analyzed, is not merely about adjusting an exchange rate number on a screen, it is a declaration of economic independence, a meticulously planned surgical strike on the very foundations of fiscal instability that have plagued Iraq for a generation. The veil has been ripped away, exposing a multi-phase operation of staggering complexity and breathtaking ambition, an operation that leverages international partnerships, brutal internal reforms, and a clear-eyed timeline that leads to a single, inevitable conclusion. The core revelation here, the one that should make everyone sit bolt upright, is that this is no longer a question of if. The central bank has moved the conversation decisively to how and when, providing a level of transparency that is utterly unprecedented in the history of this currency. They are openly discussing the mechanisms, the partnerships with global financial powerhouses like the International Monetary Fund and the U.S. Federal Reserve, and the specific conditions that must be met before the final trigger is pulled. This is the equivalent of a general publicly sharing his battle plans before the war, and it signals a confidence that has never been seen before. The roadmap exposes three distinct, interlocking phases. First, a brutal and necessary campaign of internal monetary stabilization and de-dollarization. Second, a strategic pivot towards international integration and a top-to-bottom modernization of the crumbling banking sector. And finally, the managed float and revaluation event itself. This initial phase, the stabilization, is the unglamorous, gritty foundation upon which the entire future empire of the dinar's value will be built. It is the part they don't show you in the glamorous movies about wealth, but it is the most critical. The central bank is waging an all-out war on the black market dollar trade that has strangled the legitimacy of the dinar within its own borders. They are implementing a sophisticated electronic platform, developed in concert with international partners, to track every single US dollar entering the country, ensuring they are used for legitimate trade and not siphoned off for money laundering or smuggling. The data from this crackdown is already staggering, with billions of dollars in illicit flows being blocked, directly strengthening the dinar's position. This is the hard, thankless work of building a stable foundation, and its success is the non-negotiable prerequisite for everything that follows. Without winning this internal war, any revaluation would be a hollow, temporary illusion. The fact that the central bank is publicly committing to this painful but vital process is the strongest possible evidence that this roadmap is not just another piece of political theater, it is the real, operational blueprint for a financial revolution, and we are all witnessing its first, explosive stages unfold in real time. So, the foundation is being poured with the brutal, necessary internal reforms we just detailed, but a strong foundation is useless without a formidable structure being built upon it, and this is where the Central Bank of Iraq's strategy evolves from a defensive, internal cleanup into a bold, offensive masterstroke of global financial diplomacy. The second, and perhaps even more revealing, phase exposed in this roadmap is what we can term strategic international integration and banking sector modernization, a complex title for a simple, powerful objective: to force the world to not only recognize the Iraqi dinar but to actively need it, to demand it, and to integrate it into the legitimate channels of global commerce. This is the phase where Iraq stops begging for a seat at the table and starts building its own table, inviting its most powerful economic allies to join. The centerpiece of this audacious pivot is a deliberate and strategic move away from an over-reliance on the US-dominated global financial messaging system, SWIFT. Now, let's be perfectly clear, Iraq is not being cut off from SWIFT, but its access has historically been fraught with restrictions and intense scrutiny, a lingering effect of past sanctions that created bottlenecks, stigma, and a perception of Iraq as a financial pariah. The CBI's roadmap doesn't just complain about this, it provides the brilliant, tangible solution, a full-throated embrace of alternative financial messaging systems, most notably the Chinese cross-border interbank payment system, known as CIPS. This is not a minor technical adjustment, this is a geopolitical and economic power play of the highest order. By integrating deeply with CIPS, Iraq is strategically aligning its financial plumbing with its single largest economic partner, China. You must remember the monumental Oil for Reconstruction deal, a multi-decade, multi-billion-dollar framework agreement that is literally rebuilding Iraq's infrastructure. Facilitating this colossal trade solely in US dollars was not only expensive due to conversion fees but also kept Iraq tethered to a system where it had limited influence. CIPS provides the independent, robust, and direct channel needed to conduct this trade in other currencies, fundamentally reshaping the flow of capital. But the strategy goes even deeper than just payment systems. The roadmap explicitly details the active pursuit of bilateral currency swap agreements with key economic partners like China, the United Arab Emirates, Turkey, and even potentially India. These agreements are the absolute master key to creating genuine, organic international demand for the Iraqi dinar. Here's how they work. Instead of an Iraqi company paying for Turkish goods in US dollars, requiring both parties to navigate the volatile forex market, the central banks of Iraq and Turkey would agree to swap a certain amount of their currencies. This means Turkish exporters would be paid directly in Iraqi dinars from a pool held by their own central bank, and vice versa. Suddenly, Turkish businesses have a direct need to hold and use Iraqi dinar for their operations. This mechanism bypasses the US dollar entirely, reducing transaction costs, eliminating exchange rate risk from dollar fluctuations, and, most critically, creating a permanent, structural demand for the dinar outside of Iraq's borders. This is no longer speculative demand from hopeful investors, this is hard, commercial demand from international trade partners, the kind of demand that forms the bedrock of a strong, stable currency valuation. Concurrently, and just as critically, the roadmap mandates a ruthless, IMF-supervised overhaul of Iraq's notoriously weak and fragmented domestic banking sector. The data is stark. A significant portion of Iraqi banks are undercapitalized and non-compliant with international anti-money laundering and counter-terrorism financing standards. The CBI's plan is to force a wave of consolidation, merging these weaker institutions into larger, more stable, and well-capitalized, Tier 1 banks that can withstand international scrutiny. The ultimate goal is for these new, formidable Iraqi banks to establish direct correspondent banking relationships with major financial institutions in Europe, Asia, and North America, breaking the current reliance on intermediary banks in Jordan or the UAE that act as a costly and inefficient filter. The timeline for this integration and modernization phase is projected to run in parallel with the internal stabilization, with the first major bilateral swap agreement and the first direct European correspondent relationship for an Iraqi bank being key milestones expected within the next 18 to 24 months. This phase is the ultimate bridge, transforming Iraq from a financially isolated nation into a connected, credible, and demanded participant in the global economic arena, setting the stage for the final, and most anticipated, act of this historic financial drama. We have now navigated through the gritty internal reforms and the bold international bridges being built, which brings us, inevitably, to the culmination point, the event horizon of this entire economic transformation, the final phase where theory meets reality and the roadmap delivers on its ultimate promise. This is the moment the world has been watching for, the precise mechanics of the revaluation itself, and the central bank's exposed plan reveals it to be neither a random guess nor a single, chaotic explosion of value, but rather a meticulously choreographed and carefully managed transition designed for one outcome above all others, long-term stability. The final phase, detailed in the roadmap as the Managed Float and Revaluation event, is a two-stage process that methodically transitions the dinar from its current controlled peg to a dynamic, market-driven currency, and understanding this sequence is critical to separating informed anticipation from uninformed hype. The first stage will be a significant, one-time adjustment of the official peg, a strategic leap to a new, higher rate that is not chosen arbitrarily but is calculated through a complex algorithm factoring in the tangible successes of the previous phases, the proven reduction in internal dollarization, the concrete influx of foreign direct investment from reconstruction projects, the sustained high revenues from oil exports now backed by increasing gold reserves, and the demonstrable creation of external demand via those crucial currency swap agreements. This initial revaluation is designed to be substantial enough to achieve several key objectives simultaneously. It will instantly vaporize the black market premium for the US dollar, rendering the parallel market irrelevant. It will dramatically increase the purchasing power of the Iraqi state and its citizens, curbing inflation for imported goods, and, most importantly, it will send an undeniable shockwave of confidence through the global financial community, signaling that the Iraqi dinar is now a serious, valuable, and stable store of wealth. This is not the end of the journey, however, it is the beginning of the final leg. Following this strategic initial jump, the dinar will enter the second stage, a managed float, where its value is allowed to fluctuate within a pre-announced and carefully guarded band. At this point, the central bank moves from being a micromanager of the rate to being a guardian of stability, intervening only if the currency's value threatens to move outside its designated corridor. This is when true market forces, the global demand for Iraqi oil and gas, the appetite for investment in its non-oil sectors like agriculture and telecommunications, and the daily flow of trade settled in dinar through those bilateral agreements, will take the wheel and ultimately determine the currency's long-term equilibrium. The genius of this two-stage approach is that it avoids the volatile, chaotic swings of a pure, overnight float, which could destabilize the entire economic recovery, while still allowing the currency to find its genuine, market-justified value over time. The timeline for this final phase is intrinsically linked to the successful completion of the first two. The roadmap makes it clear that specific, measurable benchmarks must be hit, including bringing inflation firmly under control, building foreign reserves to a specific, robust threshold, and certifying the consolidated banking sector as fully compliant with international standards. Based on the aggressive but achievable milestones in the stabilization and integration phases, a realistic, data-driven projection points towards this final, historic sequence beginning to unfold within a 24 to 36-month window from today. This is no longer a distant fantasy, it is the logical, planned conclusion to a process that is already visibly and undeniably underway. The Central Bank of Iraq has broken its silence not to make empty promises but to expose a viable, structured, and data-backed path to economic sovereignty. The roadmap is real, the phases are in motion, and the implications are global. This is the financial story of the decade, and you are witnessing it unfold in real time. So, the critical question now is not if this will happen, but where you will be when it does. Will you be on the sidelines, watching history pass you by, relying on fragmented information and outdated rumors? Or will you be on the front lines, fully informed, equipped with the latest, verified data straight from the source, understanding every nuanced move as this economic masterpiece is painted onto the global canvas? The landscape has permanently shifted from speculative waiting to analytical action. Your success in navigating this historic event hinges entirely on your commitment to accurate, timely, and unbiased information. Your immediate mission, your call to action, is crystal clear: you must become a master of this information. This is your moment to decide. Subscribe to this channel and hit that notification bell with force, because we are dedicated to being your essential, frontline intelligence unit. We will not just report the news, we will dissect every central bank circular, decode every international agreement, and analyze every economic indicator as it is released, providing you with the clarity, context, and confidence you need to navigate this journey with precision. The roadmap is exposed. The countdown has begun. The choice is yours to make, right now. Subscribe, and let's navigate the future of finance, together.